Hello world. Okay, so we're live, so this is going to be recorded and put on YouTube after class. Thank you very much, Michael. Okay, so let's go over a few things here. I don't wander too far. And I thought I had a marker ready to go. Oh, did I lose a dry erase marker already? There's nothing on the board, huh? I guess I did. Okay, so a few things. SU Learning is not up, and that's 100% my fault. I took so long to activate it, IT thought that I didn't want the class anymore. So they just reset it for me. All the files that were on there, I didn't lose them, but they just kind of wiped it out. So I just got to re-upload them and put it out as SU Learning. You haven't missed out on anything yet. We're typically going to use that as a place for tutorials and a place for you to upload your assignments instead of emailing them to me, because that can start to really fill up your inbox really quickly. So SU Learning, I'm going to get with IT and it should be up this week. I don't know when. So let's talk about what we've actually been doing. Gosh, I don't want to pull this. I'm so afraid. Here we go. Put it in this pocket. Looks like it's safe. If I look like I'm in danger of pulling the laptop down, please stop me. Okay, so the cycle is going to be as such. So what do we do the very first time? We had a conversation, right? Okay, so we had our convo, and that required you to do some preliminary reading discussion questions. Then we moved on to what? What did we do next? Homework. So we had a conversation together, then I set you off on your own out into the world. So we had homework. What happened after the homework? I gave you a quiz, right? A pop quiz. So now I need to know how much you retained. We talked about it, you did it yourself, now prove to me how much stayed inside your brain. Then what do we do? What kind of homework? Group homework. Okay. So we talked about it, you did it at home, then you came back to class and you showed me how much you knew. Now I didn't check those quizzes, right? That was a self-evaluation. So you know this quiz was supposed to tell you how much you retained from our initial conversation and how much you retained from your homework. Like I said, I didn't check the grades. You all graded yourself. You know exactly kind of where you're at. Then we had group homework. So we're teaching each other. And so the last step is, what do you think? Now I'm going to teach you. Now I'm going to hold your hand, and now we're going to walk step by step together. So if you hadn't grasped it once, twice, 3, 4 times, I'm going to give you a 5th chance to understand the material. And then we're going to do the same thing for chapter 19, 20, 21, 22. So we're going to take a really long process. Chapter 18, it seems like we've been on it forever. And I want you to think about it like, I don't want to go too far away from the computer. I think I'm blocking the view. For those of you at home watching, here we go. Think of it as a train. Does a train go from 0 to 60 when it first starts? No, right? You got to put the coal in it. You got to get the steam going. Right? So chapter 18 is at the initial start. We're going to take a while in chapter 18 because the concepts are so important. The foundation of chapter 18 is going to make all the other chapters so freaking easy. So think of it as a train. We're going to spend a lot of time on 18. I initially wanted to give you an exam on chapter 18 on Wednesday, but I think we're going to do that next Monday. So what we're going to do now is I'm going to hold your hand and we're going to go step by step. No, we don't actually have to hold hands. We're just going to do it step by step. Hello, hello, hello. Ooh, just barely. Okay. Gosh, and I'm just. Okay, so that's going to be the process. So you can expect quizzes after your homework, so you can study that. You can expect group work after you have the quiz. You can expect that same cycle and that same system. So we can start to anticipate what we're going to be doing. I didn't tell you the cycle before, because I want to see how you guys reacted. How do you like it? Confusing. It's a learning experience. Okay. If anything, I try and make it different. So, like I said, I promised what? No PowerPoints, right? Have we done one yet? No, I never will. But I will email you a PowerPoint for the chapter. So before your exam, I'm going to give you a bunch of study resources as well. So I won't stand up here and tell you. You can read it at home. Okay. So what's important in Chapter 18? What the heck's the point? Okay, so first and foremost, they want us to understand what an income statement is. Operating income and everything that goes with it. But first, it's not the same for everything. What are the three types of businesses that we have? Okay. Service, manufacture, we'll call it Manu, like Manu Ginobili, and merch. Whatever happened to the store called Service Merchandise? You remember that one? Yeah, it's gone, right? Maybe they focused on one too many things. I don't know. But so service, tell me about service. What is that? What you provide, but how do you provide it? There's two things. It could be three. Time, knowledge, skills. Time, knowledge, skills. So what's an example of a service company? T-Mobile, are you sure? Just a service, strictly service. Strictly service. Because T-Mobile also provides product. An accounting firm? Okay. So we have an accounting firm. Some of you in your homework put lawyers. That's a service. Law, what else? What about doctors? Doctors, the dentist? The dentist, insurance agents. So that's sort of the idea of service. A mechanic? Yeah. Okay. And so what does their cost of goods look like? They probably are the most simple cost of goods. Primarily, it's going to be what? Which is? The biggest operating expense of service companies are? Labor, which in other words is? Salary. Salary expense is going to be the biggest cost of goods sold for service companies. So we're going to put here salaries. And we'll go into depth what cost of goods sold is. But manufacturing. What is a manufacturing company? They make products from what? Raw materials. And there's three steps to that. There's raw materials. Works in process. Finished goods. Just in time is the next chapter. Somebody's ahead. So we have raw materials, work in process, and finished goods. So they're converting a raw material into a finished good. That's a manufacturing. And then they sell it. What's an example of a manufacturing plant? Frito-Lay. What are the raw materials? Potato or corn and some salt, some trans fat, some weird things that you don't understand. What else? Okay. So Frito-Lay. What is their biggest cost of goods sold item? Materials. Raw materials. Okay. Now merchandise. What's a merchandise store? What do they do? They resell products. All right. They buy products, they sell them. So resell products. My penmanship is terrible, and I think I'm blocking the entire board here. Yeah, sorry, I'm blocking so no one can see what's going on here. Resell products. What's an example? Walmart, Sam's, Target, Costco, my favorite. If you had to choose Sam's or Costco, who chooses Sam's? Costco. Never been either one. I promise you'll like Costco more. Okay. So the first step in Chapter 18 is identifying what the heck we're talking about. Service, manufacturing, and merchandising. And now we got to come up with the income statement for all of them. Okay, so what's an income statement? Okay, now tell me in accounting words. You're correct. I just want to know more specifically. Okay, so we start with, give me a second here. I'm going to pull that. Well, I don't want to. Okay, yeah. The brake is on. Oh, shit. Oh my goodness, this is so nerve-wracking. Okay. So I also don't want to block the camera here. I don't have a choice. Okay. An aux? Well, I'm using a USB cable, and it's this long. It's as long as my foot. I would need to get a longer one because it needs to connect so that way whoever's online can hear what I'm saying through the headset. Okay. Oh, what time is it? Yeah, by 2 minutes. Lucky duck. Okay. So now we got to talk about income statement. So we start off with what? Okay, now let's specifically talk about a service industry. So we have revenue. That's where we start, right? So our money. Then what happens? What do we take away? What kind of expenses? Rent, utilities, salary. So rent minus expenses equals what? Net profit. What's gross profit in a service industry? Your revenue. That may be a trick question on an exam. I don't know. So when I ask, what is gross profit for a service industry? Just revenue. Gross profit, meaning everything under the sun, including the sun. So revenue, that is equal to gross profit for a service industry. That's going to be a little different for manufacturing, and we'll get into that. Okay, simple process. Revenue minus expenses equals net income. Service should be easy squeezy. 1, 2, 3. See a lot of faces of what? Okay, so revenue, the money that you make, the sales, minus all the expenses, which is the cost that you had to incur to sell your service. So if you're a mechanic, you probably need a garage, right? So then what kind of expense is that? Rent expense. So you can't, well, it's difficult to fix people's cars outside of a garage. So you need a garage, so that's your expense. The cost of me to fix your brakes is my rent expense and whatever materials I use. That's my cost. And then net profit is everything left behind. That's how much money I made after I paid to give you service. This is what's left. This is how much I can take home. So we'll draw a little house. It looks like a pencil. Now it looks like a house. A little chimney, and they're doing a fire. Anything I can take home is net profit. Okay. See, did I get that on the? Okay, there's the little house. Whoever's watching online. Okay. Now, what about cost per unit? How do you do? Well, let's talk about service. Let's focus on the service industry. What's cost per service? How do we figure that out? Cost per service. Not number of clients. Your revenue minus however many services you performed. Minus I did 10 brake jobs, so then your money divided by 10 equals your cost per service. I'm sorry, no, it's not revenue. It's not revenue. It's your expenses. Nice catch. Expenses divided by the number of services. So we chose 10. That is my cost per service. So let's say my rent is $1,000 for my garage, and I had 10 customers. What is my cost per service? 100. So every customer that comes in, it costs me $100, but I'm charging them like $500. So looks good to me. So that's for service. Oh, expenses divided by the amount of services rendered. That is your cost per service. So your expenses would include your salaries, your wages, your rent, all of those things. Divide that by the amount of services you actually rendered, gives you your cost per service. Speaking of costs, what's a product cost? Product cost. What is that? Who is that? What it costs to buy a product? Can I have an example? Product cost. Okay. The product cost is the actual price that you pay for an actual finished good. What about a period cost? What is that? This classroom's too quiet. You're not wrong, but I'm looking for specific keywords. A period cost. Yes, during that accounting period. Yes, because why an employee's paycheck? Because it's part of an accounting period. So if you're doing your books on a semi-weekly basis, on a monthly basis, quarterly basis, anything incurred in those time frames is a period cost. Is that directly related to product costs? No. Period costs are external. Product costs, I don't want to say internal, but that is what it is. Okay. Yes, you can. So like, let's say you're a mechanic and you're doing brakes, we got to buy the brakes, right? So that would be the example. Okay. What about, what type of industry is a zoo? It's a combination of what? What's the merchandise? All the crap they sell in the gift shop is the example. Okay. Now let's talk about strictly the animals. What type of service? If they had no gift shop, what kind of service, I'm sorry, what kind of company would that be? Entertainment, which is? Service. Because they're not selling you the elephants, right? You can't buy the monkeys? No. So it's a service. Okay. That may or may not be an exam. What's a zoo? I don't know. Okay. Let's go into, what is the IMA? IMA. I, the letters I, the letter M, the letter A. What is that? Who is that? Why are they? When? When doesn't apply. Just had to finish it. No more guessing. No more guessing. And Terry cannot answer any more questions for everybody. Thank you, Terry. IMA. We already forgot what the IMA is. Yes, and there's 4 parts to that. What are the 4 parts? Competence, integrity, what are the other ones? Liability? Credibility, and the other one? Confidentiality. Why are those important? Why is credibility important? How do you show yourself to be credible? Okay. Okay. As a manager, you show your internal controls to the bosses at B. You show them this is what our plan was, this was our budget, this is what we implemented, these were the results. After a period of time, your credibility increases because you're sticking to your plan and your budget. What about integrity? How is that important? Or tell me about that. Why is that important? What if you come up with a plan to reduce payroll by taking away people's lunches? But you really didn't take away people's lunches because then everybody would quit on you, right? You can't work eight straight hours without a break. People would be upset. But you told your bosses that you took away lunches, and look at the productivity, and you started cutting people's hours without them knowing. Is there any integrity in that? No. You're lying just to make the report look good. That's why it's important. Don't do that. So we talk about credibility, integrity, confidentiality. Why is that important? It's like keeping a secret. Exactly. Let's say I'm doing a report on every single student in this classroom. I keep a behavioral report. Every time you act up, every time you say something, I keep it in my notes. If I let that information get out, what do you think would happen? But you're spying on me. What are you doing? You'd be upset, right? So that's why that has to be confidential. You would disrupt the business flow. Even though those practices are important to the business, let's say you're trying to keeping every time somebody smiles in the office, I'm going to keep track of it. Conversely, I'm keeping track of people that aren't smiling. I'm going to use that. Whenever we want a raise and you ask me for a raise, I'm going to look at that chart and say, well, you only smiled once in the entire month. I'm not too sure you're the happy person we want for this company. Right? If you knew that I actually kept track of that, how would you feel? So the results would be skewed, right? That's why you have to keep that confidential. Okay. You can, as long as you're not mentioning any names. Well, Armando doesn't smile at all, and if the manager keeps telling that to all the other businesses, then Armando's going to get a pretty bad name, right? And that's not fair. So you got to keep that confidential. Okay, and the last one. Wait, we did credibility, competence. Why is that important? Okay, so let's say I own a mechanic shop. I have the best mechanic in the world. He loves changing brakes. He can change brakes in 30 seconds flat for an entire car. Amazing. And I promote him to manager. And he's like, I don't know anything about being a manager. I know how to fix brakes. And I say, well, you got to do payroll. You got to report to the bosses. You got to create schedules. You got to tell me how much we're paying for brakes. You got to tell me how much when brakes change. And you got to tell me by tomorrow. What's going to happen to that manager? He's going to fail because he doesn't have the competence to be a manager yet. So it's important that the managers in charge are competent in being a manager. You can be the best employee in the world, but you can be the worst manager. And just because you are the best employee and you've been there 30 years, I deserve to be manager. I'm the best brake person in the world. Okay, well, do you know how to do payroll? Do you understand all these things? Do you understand? They're like, no, but I deserve it because I've been working here 30 years. I should be manager. It doesn't make it true. It makes you the world's best employee. Congratulations. Thank you. But it doesn't make you a good manager at all. So that requires a lot of training, a lot of education, and that's why you need to make sure that your managers are competent. Okay. All right. So we talked about period cost. Above all, what is cost of goods sold? It's not just one word, but what is it? Costs of goods sold. What is that? When do you pay for those goods? After you sell them. So what are they before you sell them? Just expenses. They're just expenses. Sometimes they're assets. When are they assets? When are they expenses? Before and after. So let's say I have an inventory of 30 million shoes that have not been sold yet. Is that an asset or an expense? It's an asset. When does it become an expense? After I sell it. So whatever it cost me to buy those shoes or to make those shoes, it doesn't become an expense until after I sell it. Cost of goods sold. And the cost of, so if we break it up into two parts, it's easier to understand. We have our cost of goods, which is how much we had to pay to get that good in our warehouse. And cost of goods sold is how much after we sold it. So we have here cost of goods, their assets, cost of goods sold, expenses. That's the difference. It's a big, long, scary word. If you break it up, it's easier to understand. Assets and expenses. Okay, we talked about service companies, period cost, merchandising companies. We'll move on to next. All right, so cost of goods sold. And we're going to see that in pretty much every single chapter we deal with. So you better understand it now. Okay, a merchandising company. How do we get the cost of goods sold for a merchandising company? What's the first thing we should start with? Beginning product. In different words? Merchandise inventory. So beginning, we're talking about cost of goods sold for a merchandising company. We have a beginning inventory. That's what we have on the shelves. Then what do we do? Someone's reading the book. Great. Plus purchases and freight. What does that give us? Cost of goods available for sale. So let's say at the beginning of the month, January 1st, we had $100 worth of shoes. January 10th, we bought $50 worth of shoes, and it cost us $10 to bring it in. So we have $160 worth of cost of goods. So this is cost of goods available for sale. For my penmanship is much to be desired today. Okay, so we have cost of goods. I don't even know if you can, it's all backwards on the video too. I apologize. Okay. Cost of goods available for sale. Then what should we get rid of? Ending inventory. Whatever's left. We sold a bunch of this stuff throughout the month. Whatever's left. Ending inventory. And that equals cost of goods sold. COGS. So we start beginning inventory, what we have, minus, we add anything that we bought, and that includes freight because it is a cost. And that gives us our cost of goods available for sale. That gives us everything we have to make money. At the end of the month, we're going to subtract whatever we had left. So we got $50 worth of shoes left. So we started with 160 and we ended with 150. What was our cost of goods sold? Okay, so we started, beginning inventory was 100. We bought $60 worth of purchases, which is $50 worth of shoes and $10 worth of shipping. That equals 160. And our ending inventory was 50. 110. And what is that 110? That was how much we paid this month to sell the product. We paid 110 bucks. Now, it's important to distinguish cost of goods sold is not how much you sold it for. That's not your price. Your price is something entirely different. Because if you're selling at the same price you're buying, you're going to go out of business very quickly. So that is how much it cost us to sell our shoes. Okay. Merchandising needs. Okay, so we did service. What was service? How do we do service? Cost of goods sold. Revenue minus expenses, cost of goods sold. Easy squeezy. Revenue minus expenses equals cost of goods sold. Revenue minus expenses equals COGS. Rev minus exp equals COGS. Sound good? Easy to remember? That's for service. And then merchandising? No. Don't look at it. Beginning inventory plus equals. Yes. Yes. Thank you all for participating. Okay. Now let's move on to the hard one. Ugh. Manufacturing companies. That one, there's like 50 million steps. I'll never understand. I'll never get it. But first, let's understand the components of the manufacturing company. Because it's not just cost of goods sold for a manufacturing company. What do they have too? COGM. What's COGM? Manufacturing. Cost of good manufactured. So how much it costs them to produce it, and then they still have cost of goods sold. Okay. So manufacturing companies, we talked about them before. There's three components. There's three types of inventory that a manufacturing company has. What are they? Raw materials, rim, whip, and fig. Rim, whip, fig. Will that be on exam? I don't know. Who knows? Maybe. Depends on how I'm feeling when I write the test. Rim, whip, fib. Rim, whip, fig. Okay. And raw materials is what? What you buy to make it. Work in process. Okay. And a finished good inventory. What type of company is McDonald's? Interesting, right? Do they bake their buns? Let's think of the actual McDonald's store. Do they bake their buns? No. They buy the materials. So then are they a merchandiser? They buy the materials and resell them? Not necessarily. Why? Can you go to McDonald's and just buy a bun? Sure you can. And say, I'll have a hamburger minus the meat. Sure you can. But if we were to really look at it, what are they doing? Do they have any raw materials in their store? But is that a raw material? The raw material would be the potato. Do they bring cows into McDonald's and butcher? No. Do they bring... They're not making anything from scratch, so they're not a manufacturer, right? No. Merchandise, what's the merchandise? Right? Because they're buying from the manufacturer. They're buying the meat already made. They're buying all the buns and all that stuff already made, and they are reselling it. Okay, yes? The rawest. Potato, the cow, the flour, the sesame seed tree, plant. Depends. Depends. Depends if the restaurant has a garden in the back and they're pulling from there. You buy the potatoes, process them. They could be manufacturer. Depends though. We're talking about McDonald's. McDonald's then is not a manufacturer. Service. Yes. Yes. Like Armando said, there are combinations possible. So merchandise / service. Also like the store, service merchandise, which is out of business now. But so, okay, that was McDonald's. Anyway, where were we? Manufacturing companies. All right. I think I yelled really loud. If anyone's listening at home, I'm sorry. Okay. Let's start off with the easy one. Let's talk about their finished good cost of goods sold. So we start with, let's say we are, the book uses a table company, but that's boring. Anyone have a better example of a manufacturing company? I'm sorry? Tires? Something more exciting. Chevy? A little more exciting. Wooden furniture? That's boring. Keys? Still boring. Still boring. What's a fun manufacturer? What's that? No one's thinking surfboards. No one's thinking airplanes. Who's beeping? That is me. Ah, my goodness. I am embarrassed. Silence. Okay. What's the most exciting company you can think of? Manufacturer. Let's take toys. I like toys. Halloween costume. That's fun too. Halloween costume toys. Okay. Halloween costume toys. ACCT. So we have, what do we start with if we're working with inventory? Let's say we created a bunch of Halloween costume toys. Let's say fake swords, fake wigs. That's a toy, I guess. I don't know. So we have beginning what? Beginning finished goods. So we have all of the play swords that we already have in stock. Then what do? Add the cost of good manufacturing, which is what? What is the cost of good manufacturing? Well, yeah, so then, perfect. So then what part of the process? There's three. There's raw materials, work in process, and finished goods. Where does our cost of good manufactured come from? Work in process, yes. You don't have to ask it like a question. You were right. You can say it with more confidence. Work in process. We get our cost of good manufactured from our work in process. And we're going to figure out, so right now we're going to be figuring out cost of goods sold. Of course, absolutely. Okay, so right now our end goal is to figure out COGS, cost of goods sold, for a manufacturing company. In order to do that, we have to include cost of goods manufactured. We get that from the works in process. So we haven't done the cost of goods manufactured yet. This is an extra detail that we'll go into in the next minute and a half. I don't know. Let's see how good we are on time. So we add that. That gives us what? We have our beginning finished goods. We have all of our toy swords. And then we add how much it costs to make them. Available for sale. Cost of good available for sale. Cogoffice. Cogoffice. We have cogoffice. And after cogoffice, what do we get rid of? Ending. Ending inventory. Ending finished good inventory. Which is unforgivable. It's trying to help you remember these. Right? Okay. And that equals what? COGS. Cool. So we start beginning finished goods. What we have. Remember, we're always going to start with what do we have? If you have no place and you can't remember where do we start, always remember, well, what do I have? What do I have? Okay. Then we're going to add anything we had to buy. What do I have? How much did I have to buy? Boom, add that. That's going to give us our cost, or COGFIS, which is cost of goods available for sale. And then we have our ending finished good inventory. Whatever it is that's left. What am I starting with? What did I buy? And what do I have left? If you remember those three things, then you can do cost of goods sold in anything: service, manufacturing, merchandising. What do I start with? What did I have to buy? And what do I have left? What did I start with? What did I buy? And what do I have left? And that goes for any type of industry. That's going to give us our cost of goods sold. So that was for cost of goods sold for manufacturing. Okay. Now we have, okay, so now let's talk about, since we're on manufacturing, this one goes pretty deep and it covers at least 6-7 pages, and all the other ones cover like a page and a half. So this one is a little bit more in detail. But we have product costs. We gotta be a little bit more specific about what we're paying for and where it's coming from. What are the three types of product costs? With relation to manufacturing, which is? We'll talk about those in a second. Yes, who said that? Yes. Yes, you get a prize. The prize is congratulations. Direct materials. So what do we say? The Halloween costume toys. So we got to buy the silicone parts to make the plastic, or the oils needed to make the plastic swords, right? So that's our direct material. What is our direct labor? The actual person that's melting down these particles to make the actual sword. And what is manufacturing overhead? Indirect. Salaries of who? Let me throw a situation at you. Let's say the Halloween costume toy sword maker technician. It's his first day on the job. He's thrown into the line. He doesn't know how to melt the materials. He says, "Supervisor, I need your help." The supervisor doesn't take the time to train. He just says, "I'll do it for you. We're behind." Now, what kind of cost is the supervisor? Is he a direct labor or indirect? The supervisor actually created the sword. Supposed to be. That's a key word. Supposed to be. But because he's a bad supervisor, he doesn't take the time to train, it's still going to be called indirect labor because he's a supervisor and he's not supposed to be touching those things anymore. He did touch it. But in case that he didn't touch it, indirect labor. Supervisors are always indirect labor. What's the job of a supervisor? Supervise! Yes, you got it, Maida. Thank you. Supervise. Then they're not being a really good supervisor. Then they're helping and they're not supervising. If you're a manager and you feel like you need to jump in and help your staff, you're doing a disservice to them and a disservice to the company. You're supposed to be managing them. You're not supposed to be doing their work for them. Are you going to be receiving their paycheck at the end of the week? No, they are. And they're going to thank you for it. Thank you, manager, for doing my work for me. So think of that. Are you going to get paid for the work that you're doing for somebody else? No. So do not do their job. Do your job. It's a little life advice that kind of threw into manufacturing overhead. Anyway, what is a prime cost? Prime. Yes, direct material and direct labor. What is an Optimus Prime cost? Just a really cool movie, that's all it is. Okay, conversion cost. What is that? Direct labor plus overhead. So conversion cost would be an example of what? What did we just say? Yes. Exactly. The supervisor helping the guy, helping the technician, guy, lady guy, Lady Gaga. That would be a conversion cost because it's the combination. Because if it was by itself, it would be that type of cost. But together, it's a conversion cost. Prime cost, direct materials and direct labor. The silicone comes in, the guy turns it into a Halloween costume toy sword. Prime cost. Now, the supervisor jumps in and helps the line guy. Conversion. Easy squeezy? For now. Okay. All right, so that is basically the foundation of Chapter 18. My goodness. Who is beeping me? Let's find out right now. Oh, it's my wife. I'm in trouble. Silence until after class. I'll get back to her. Now I'm in bigger trouble because she's going to see the recording. What? Now I'm in worse. I'm digging a hole that I cannot get out of. She's awesome. She's awesome. Okay. You're awesome, babe. Okay. All right. So let's pull out your books and let's do the homework step by step by step by step. We're going to start with your latest homework, which is S18/14. E18/14. Yes. Let us open up with that step by step by step. So for those of you that aced it, you're going to be like, "Oh, duh, Mr. Salcello, how do you not know that?" But for those of you that didn't get it, you're going to be like, "Oh, aha, that's what I missed." So for both of you, for those that already know it, for those of you that didn't know it, it's going to be an aha moment. Like, aha, I got it right. Or, aha, that's what was missing. Or, aha, this is, where am I? Anyway, all right, let me just pull it up here so we can follow along. My goodness. Start with 14. I should have received everybody's by this morning, yes? Did you ever get the email back? It's okay, better be safe than sorry. If you need to send it 10 times, go ahead. Thank you. I'm sure I received it. Okay. Get set up here. Start with 14, right? Yeah. Whoa, too big. Come on, computer, don't quit me now. Okay, S18-14. Okay. I think I have the same book as you all, so I will experience what you experienced. Here we go. Aha. Okay, S18-14. These are the exercises. So these are meant to be difficult, but they are the last exercises of the chapter, so they're supposed to be difficult. It's putting everything you learned about the chapter all in one. Okay. E18-14, comparing managerial accounting and financial accounting. What's a managerial accountant? What does he do? Yes, he does finance, but in what way? Internal. And a financial accountant? Yeah, external. So the way to look at it is a managerial accountant is future, financial accountant is past. Who's future? Who's past? What hand is this? How many fingers am I holding up? Okay, great. Okay, so now we understand future and past. What is a budget? Is that future or past? Right? You go and you say, your personal budget's at home. I'm sure you all have one and you follow it very closely, but I know that I have $200 to spend every week on groceries. I know that. So, did that happen yet? No. Did I buy next week's groceries yet? No, but I know that I got 200 bucks. So then, what about creditors? How do we deal with creditors? Is that financial? It's in the past, right? So you used your credit card, you bought something you couldn't afford, and now you got to pay it back. That purchase happened when? In the future or in the past? In the past. What is your responsibility to the creditors? Pay them how? Pay, pay them on time. Pay them in a timely manner. In a timely manner. So that is past tense. You made a purchase and now you got to pay for it. And pay them in a timely manner. Okay, what about controlling? What is that? Future or past? Controlling. Future, present, future. So you created your budget and now you got to control it. You got to implement the budget and you got to evaluate what happened. So that's in the future. Okay, what about planning? Right? It says it in the word. You plan to do something. You haven't done it yet. Future. Right? And what kind of information would the stockholders want? Financial. Right? They want to know how we're doing. Not how we're going to do, right? But how we're doing now, present and before. Okay, so now let's answer all these questions here. I guess we have to match them up. Accounting systems that must follow GAAP. Financial accounting. External parties for whom financial accounting reports are prepared. Creditors or stockholders. Better yet, creditors and stockholders. It's the best way. Okay, so you can't answer more than one. Okay, C, the role managers play when they are comparing the company's actual results with the planned results. Controlling, we just talked about. Okay, D, internal decision makers are managers. Do they go for outside consultation to make decisions? Does the McDonald's manager ask the Burger King manager whether he should fire someone or not? No, maybe, right? And now we're infringing on confidentiality, right? Okay, so he should not. He can, he should not. E, accounting system that provides information on a company's past performance. Financial. Past, financial. Future is? Past. What kind of dance is this? It's a past present tense. All right, so if I see you doing that during a test, I'll know that you have the right answer. Be like, they got it. Okay. Gosh, I got distracted. F. It's like such a good dance. F. Accounting systems not restricted by but chosen by comparing the costs versus the benefits of the system. Managerial. That's the backbone of the managerial society. Okay, G. The management function that involves choosing goals and the means to achieve them. Planning and... No, just planning. You're good to go. Okay, just planning. No tricks. Sorry not to play tricks on you. E18-15. Understanding today's business environment. Ooh, match the following terms of appropriate statement. Some terms may be used more than once. Okay, so what is e-commerce? What is that? Electronic commerce, yes. And what is it? The internet? Does it have to be the internet? Could be by phone, because the phone's electronic, right? Any type of business that occurs outside of the business property using means by electronics is e-commerce, but more so known with internet. About 99.9% of the time, it's internet. If you're ordering things by fax, is that e-commerce? Yeah, sure, why not? It's e-commerce from like 20 years ago. Yes. Does anyone still use faxes? I know, it's crazy, right? But I still do it. All right. What about enterprise resource planning? What is that? Enterprise resource planning. Or what is it? Couldn't have said it better myself, but maybe I can try. When a company, I was going to say the same thing you said. All right. Exactly that. Everything into one place. Payroll, budgeting, anything and everything you can think of for a business, it happens all in one place. A company that made billions and billions and billions of dollars and continues to make billions of dollars doing that is Oracle. Oracle creates enterprise resource planning for companies. And they have been a billion-dollar company since the computer was invented. Okay, so it could be a very lucrative business. What about just-in-time management? What is that? I'm very excited that you didn't use just-in-time in your description. Yes, ordering what you need right when you need it, like McDonald's. McDonald's doesn't buy 2 months worth of meat for today. They probably buy, I don't know. Who's ever ordered for a fast food company? Anyone ever ordered food? I mean, not ordered, not as a customer, as maybe a manager. Sam's? About a week in advance? So just in time. You can take it. It's a good ringtone. I like it. Okay. Yes, so just in time. It says it in the word, right? What about total quality management? What is that? Total quality TQM. What is TQM? Did you ever expect to be taking a class in phonics as well in managerial accounting? No, it's fun, right? At least for me. I'm sorry. TQM. What is TQM? Total quality management. What do you think that name suggests it is? Who wants to take a stab at it? Yes. So it's an idea that the managers strive to have the highest quality in their products, in their service. Total quality management. Everything they do is high quality. So along that line, we're going to take a quick segue. Where are we? We're almost at break time. I'm going to leave you with this. And we'll take a break, and we'll come back to wrap up. I just keep losing these dry erase markers left and right. Cool. Okay. There's two things. And they're the most important things as far as tasks. And that's number one. I don't need to use two. Number one, you ask yourself, is it complete? This is for total quality management, as well as for your life. Number one, is it complete? Number two, is it professional? Is it complete and is it professional? When I receive your homework, the first thing I check, is it complete? Did you attempt all the problems? If you didn't, I know it's going to be a percentage of how many you missed. If you completed it, I already know you're going to get a 70. That's the lowest you can get if you complete all the problems. Is it professional? Did you hand it in to me with a piece of paper with ragged edges, coffee stains, and it smells like cigarettes? Yes. If it's menthol, maybe I'll give you extra points. I don't know. But is it professional? Is it complete and is it professional? Anytime you turn in anything to anyone, is it complete? Did I do what they asked? And is it professional? Because anytime you turn in an assignment to any teacher, to anything, to your boss, to anyone, that's what you're going to be judged on. Your effort and your understanding of directions. Every time you turn in a homework is the time I get to judge you. So think about that. That's why I give credit for those 105s. If it looks beautiful, I will give you the credit for that. That tells me that you really care. Like I said, you can still get 100 and it can be ugly, but just remember, is it professional? Is that something that you're proud of? So, with that, go on break. I'll see you in 10 minutes. Thank you, Armando. Extra credit. Oh, he did? I thought he was going to the Rockets. I thought he was going there. Test, test. Are we still recording? We're still recording. All right, let's go and pick up exactly where we left off. Who's that? His name is Chapter 18. I'm sorry. Mr. Chapter 18. What do you think we're going to do to Mr. Chapter 18? We're going to kill him until he's dead. Sound good? All right, cool. Let's get started. Where do we leave off? 18-15. All right. So A. Just in time. Yes. I didn't even get to read it. Fine. Okay. Yes, just in time management. You are correct. B. Tiquim. C. ERP. Nice, Nina. Thank you. And the last one? E-commerce. No, e-commerce. That's the only way to say it. Okay. 18-16. So this one, your responses are probably different. But what happened? Who stole? No, that's Mr. Chapter 18. He didn't steal. Dale stole. How did he steal? By putting gas in his car. How much? $450. Can you imagine that? Somebody stealing $450 worth of gas. It's not 450 bucks. It's worth of gas. That's worth a lot more. So whose fault is it? Are you sure? It's Sue. It's Sue's fault. She needs to report it, but it's going to make her look stupid too. Why? Because he was stealing right under her nose and she didn't even see it. No, Dale was barely hired. She was in charge. She's the manager, I do believe. She's the controller. So she's in charge of all the money coming in and coming out. So she just caught this, and it's a little too late. He stole 450 bucks. Rule of thumb when you have your own businesses, if you have things to get stolen, they will get stolen. Employees will steal. What's the number one thing employees steal? Time. How do they steal that? By daydreaming, Facebook, not doing their job. Any and every minute that they're not doing their job, they're stealing from you. And is it their fault? No, it's their manager's fault. Why? Every minute that this person's on Facebook and the manager doesn't do anything about it, they're accepting that that's okay. When I go to a restaurant and I have a very terrible experience, do I blame the waiter or waitress? No, I blame the manager. I blame the manager who's not standing there making sure all the waiters and waitresses are doing exactly what they're supposed to be doing. But I do see managers all the time sitting here, talking, fooling around in the corner. You always see them fooling around. And when I get a bad waiter or waitress, guess who you think I'm speaking to? The manager. Who gets their ass kicked? No, the manager. Because I hold them accountable and responsible. I only do that because I came from a background of restaurants, so I have a really high standard for what managers are supposed to do. And I don't call him manager. I call him Mr. Mr. who's not working. Mr. I saw you standing there for the last hour while I got shitty service. Can you do something about this? I'll give you a tip. If you ever get bad service, you have to tell the manager or the person that seems to be in charge exactly what you want. They're not going to guess, and they're not going to give you anything. Say, listen, for the last hour, I've been served water or my drink once. I've been thirsty the entire time. I've asked over and over again for a refill, and they never gave me a refill. You're not going to charge me for my drink this evening. They're going to do it for you. If you're specific, they'll do it for you. Your food came out bad, it's your duty to tell them. Your service was poor, it's your duty. And tell them, listen, this plate was garbage, you're not going to charge me for that. The manager, 99% of the time, will say, okay. There's a tip. Tell them exactly what you want, they'll give it to you. Because they're over there fooling around. And if the boss finds out that the manager was standing around fooling around, they'll get in trouble. So they'd rather make you happy than to get in trouble. Tidbit. You can take that and you can use that today. Okay. E1816. So what should Sue do? I think some of you said she should report it. Okay. So now using the restaurant example, do you think she's going to get in trouble? Absolutely. So what is she going to do? What should she do? Which is the ethical thing, which is own up to it. She screwed up. She looked the other way while this guy was stealing, right under her nose. Own up to it. If you own up to it, chances are you'll be better off. Do the ethical thing. Okay, and so the second part was, would you change your answer if Sue was recently hired as a controller? No, it's still her job, right? Still her job to scrutinize money coming in, money coming out. That is her job. Okay. Now the next one's easy squeezy. Company A, Company B, Company C. The first part we have to recognize what is what. Company A is what? Manufacturing. What gave it away? Finished goods, work in process, all of those fancy things. Company B? What gave it away? Says service revenue. And Company C? By process of elimination. Merchandising. And it also says merchandise inventory right in the box there. Okay, so that was a quick one. 18, identify differences between service merchandising and manufacturing companies. Using the above data, calculate operating income for each company. How do we get operating income for a service company? Sales revenue minus expenses. Minus cost of goods sold. In this case, the example only has expenses. So you start with revenue minus your expenses equals your operating income. What about manufacturing? How do we get the operating income for manufacturing? There's a bunch of stuff in there that you don't need to calculate it. Like cash. Do we use cash? No. When are we going to use cash? When you're doing assets, which is found on the the balance sheet. So there's a bunch of assets in here, but all we want to look at are the revenue and the expenses. Okay. Revenue and expenses. So where do we start off? Let's just do that in order. Company A. What do we start off with? Revenue. How much money did we make? 37 minus what? Which is? COGS. Why do we subtract that? That's how much money it cost us to make that money, right? What at the end of the day, we want operating income, which is what? The money that we can take home. I even drew a little cottage. It had a little fire. Operating income is the money that we can take home. So we got to figure out how much money we made. We got to get rid of everything that cost us money, and we're left with how much money we can take home. Okay, so we get rid of cost of goods sold because that cost us money, right? So 37 minus 22, 15. That's our gross profit. That is profit. I'm sorry. That is our profit before expenses. Gross profit. Okay, and then we have all our expenses, which are? Okay, which total out to? 9. Subtract 15 from 9? 6 million is how much money we can take home. How awesome would it be if you could take home $6 million? Then you better start a manufacturing plant. All right, Company B, which is a service company. This one's easy squeezy. We start off with how much money? 40 million. It's important to be very specific. Then we get rid of how much? Wages and rent. Get rid of 31, and we're left with 9 million. Wouldn't it be nice to take home $9 million? What do you got to do? Start a service company. Ah, you guys are catching on. I like you guys. All right, Company C. This is merchandising. What do we start off with? How much money? Always revenue. Never cash. Forget about cash. Then we get rid of what? COGS. And then we're left with what? 15, operating expenses. 8, subtract that. 15 from 8. 7. You guys have got this. I don't even think we got to review this. We're on top of it. E18, 19. Now we're looking at what? Current assets. let's see here. Identify differences between use above calculate total current assets. Now this is something that wasn't in the book, that didn't describe what a current asset is. It only gives you an example of total assets. What is a current asset? Current asset is short term. What is short term? Within a year. Anything outside of that year is a long term asset. So anything that can be consumed within 1 year is a current asset. That is not in your book. That is in the first 1,000 pages of the other book that you don't have yet. So anytime that comes up, I'll make sure to point it out to you. I apologize for not pointing it out to you before you did the homework, but total current assets. Okay, so then what is a current asset? Equipment. And if you're a merchandising company, inventory. Inventory is an asset until what? Until you sell it, and it becomes what? You guys are awesome. Okay, so company A, what are we going to add? Now we're only adding. We're not subtracting. We're not doing division, anything weird. Cash. Boom. Yes. How many inventories do we have for this one? 3. Are we going to add all 3? You betcha. We're going to add all 3. Cash, accounts receivable, raw materials, work in process, finished goods. That gives the total current assets of what? Close. 33. We have 8 million in cash, 12 million in accounts receivable, that's 20. Raw materials is 23. Work in process is 4, so that's 27. 27 plus 6, 33. Okay. Company B, this one should be easy squeezy. Oh, I'm sorry. Let's look at. The equipment is, can that be consumed within a year? No. Let's say you're a boot maker and you have a boot making machine. Are you going to throw it away at the end of the year? No, that's a long-term asset. So anything anything from a year and over is long-term. So a current asset is a year and under. You can yes, you can depreciate it, and it does depreciate. For now, equipment is a long-term asset. Well, not for now. It always is. Right? Cash. Cash is a current asset. Cash, accounts receivable, inventory. Those are all current assets. Equipment is an asset, but that is a long-term asset. Okay. And that's the only thing that I don't think was in your book as far as explanation. Okay. And we're looking for company C. What do we have in company C? Cash. Okay. That's it. 1, 2, 3. Add them all up, you should get 37. I think they give you the answer too in the book. So I just want you to see what you can add to get to 37. Okay. And the last one, 20. This one is fun. A lot of X's. Okay. And after that, we are done. I'll give you your homework. Yes, there's homework. Boo. But I assure you, after today's class, you're going to finish it like in a second. Maybe a little longer, but some of you, like a second. Okay. So let's look at, it's broken down into product and period. And you have to check mark everything that applies to that specific item and or thing. I guess it's a noun, person, place, or thing. A, metal used for rims. What is that? It's a direct material. What else is it? Prime cost. It's a direct material on both. Is it time? Sorry, what's that? Oh, did anybody bring notebooks? I don't even know. Did you guys know it's notebook day? You can come in and tell everybody. Yes. No, not a bother. Please, give us your spiel. Are they still doing the raffle? Yes. Okay. The school drive. You can bring it Wednesday. You can give it to me on Wednesday, and I'll turn it in. So I'm going to get names. I'll give you names and who turned it in. So what's going to happen is if you turn in your notebook to me on Wednesday, the extra credit is the next homework you get, you'll start at a 70 instead of a 60. You write your name on it, turn it in to me, I'll give you a C. So it's like a get out of jail free card. That's the extra credit. If it's worth it to you, bring a notebook for $1. Sound good? All right. You're welcome. Trying to do my part. If you bring more than one, you can do it only up to once a week. Only up to once a week. Okay. So we had a direct material and a prime cost. B, sales salaries. Selling, which is a what kind of cost? A period cost. Why is it a period cost? It's every period that you're going to have a salary expense. It's an expense that every time goes into that accounting period. So it's selling, it's a period cost. Okay. Rent on factory. Overhead and what else? Conversion. Easy squeeze. You guys got this. Yes. The answer is yes. Overhead will always be in conversion. D. Wages of assembly workers. Yes. 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 Why is it conversion? It's in the middle. And it's also that example I gave to you. What if a supervisor gives some guy some help? It could be conversion cost. Okay. E, salary of production supervisor. Overhead, which is also conversion cost. Depreciation on office equipment. Administration period cost. Because you don't need to depreciate this equipment to sell, right? So it's going to be an administrative. Salary of CEO. Administration, easy squeezy, right? And last but not least, delivery expense. Selling, yes. Overhead, why? Delivery is once it leaves your factory. So delivery expense would be the amount of money that you pay for gas to put into the semi truck to drive it to your vendor. So is that an overhead cost? It's a cost that you need what? To sell. Okay. To receive, like freight in, it would have said freight in. So freight and delivery are different. Freight is incoming, delivery is outgoing. So in order to make our Halloween costume toy swords, we have freight coming in and all of our materials coming in. But we don't need to fill up the tractor trailer that's leaving in order to make that product. That's why it's only a selling cost. That's the cost that we incur to sell the product, but not to make the product. That could be where confusion is. Okay, easy squeezy is a little more clear now. All right, let me give you your assignment that you're all dying to do. And it's 1, 2, 3, 4, 5. E18-21 through E18, you guessed it, 25. Now, what I'm going to do is I'm going to make this due Wednesday before class. Why am I going to do that? You can come to me Tuesday afternoon for tutoring if you need it. That's why. Because we're gearing up for what? An exam. So if my suggestion is to attempt all the problems before you come to tutoring and identify if you got stuck, identify exactly where you got stuck, and we will unstuck you. 2 p.m. to 5 p.m. Tuesdays and Thursdays. Just make an appointment with me and I will be there down in the library. 2 p.m. to 5 p.m. Tuesdays and Thursdays. This is due Wednesday before class. So you have 1 day tutoring. So you have time in class today to ask me any questions. So you have about 20 minutes today if you have any confusion or anything. And then you have a total of 3 hours if you need it on Tuesday, 2 p.m. to 5 p.m. Please just let me know that you'll be going and I'll be there. Any questions? This is homework 5. Homework 5. Homework 5. Yes. Yes, the group homework. That's okay. That's okay. We're keeping track. So homework 5. This is homework 5. Okay. And before you leave today, you all have to punch Mr. Chapter 18 in the face. It doesn't have to be hard. You don't have to break your nails, but just remind him that you're in charge. Okay. So I will be here. I'm going to go ahead and end the broadcast. Whew. End the broadcast and